Welcome back, everyone. Most traders lose money because they don't understand one simple thing, and this is what we call the volume. Now, today, I'm going to show you the exact volume trick that reveals whether a breakout is real or fake. And once you master this, your entire trading will change. Most traders don't even know that volume actually exists. But after today, you will never look at the chart the same way again. Welcome back to this channel. My name is Mr. Joshua, that actually help traders to trade the smart way. And without guessing, in this video, I'm breaking down a powerful volume confirmation strategy that helps you avoid false breakout, false reversals, and manipulation traps by the market makers and our dealers. So now, this method has helped thousands of traders. In fact, it has helped me specifically improve my accuracy, and you are about to learn it step by step, and I'm going to take it gradually so that you will learn this and also share this video with someone and teach someone about this volume trick that I'm talking about. Now, first of all, what really means by volume? What does volume really mean, and why traders misuse it? Now, volume shows participation, it shows interest and convictions of traders around the globe. When we talk about participation, we're talking about both the retail traders, we're talking about the dealers, we're talking about the institutions. Now, when they show interest in a particular direction, whether it is buying or selling, it is actually what volume that it will show in the forex market. Now, the conviction, the sentiment of retail traders, of traders entirely, is actually what volume. Now, the price can lie actually, but volume never lie. Put this at the back of your mind. The price can lie, but volume never lie. Now, a candlestick moving without volume equals to a weak move. Any candlestick that moves without volume is actually a weak word, a weak move. It is volume that brings about what? Strong move. A candlestick moving without strong volume, it equals to validated word move. Have this at the back of your mind. A candlestick moving with strong volume, with strong volume equals to validated word, validated move. Now, the market makers always leave footprint, signals, and patterns for us to know if there is volume in the market or not. And these are the things that I want us to look at in this video so that we'll know how to trade the smart way. Now, there is something that I call the core value trick. This is the 2 times confirmation rule. It is called the 2 times confirmation rule. And here is a trick that changed everything in this video. The 2 times volume confirmation rule. The first is that we need to put our back of our mind that a breakout or reversal is believed only when the breakout candles has formed 2 times bigger than the previous 10 candles. That is when you will know that a reversal or a breakout is actually true, is actually genuine, is validated. Now, I take it again. Let me repeat again so that we will know that a breakout or reversal is believable only when the breakout candle has volume 2 times higher than the previous 10 candle. Now, if the volume is not double, the move is weak. The move is weak. A reversal is likely to happen, and you have to avoid entering too early. That's why we need to understand this strategy. This rule actually filter out 70 to 80% of fake moves, because many retail traders are being caught in the in the dilemma of entering quickly in the market. So it is better you wait and confirm the direction with this particular trick that I'm actually sharing with us. So how can we apply this trick to our trading? Now, if for example we are trading a breakout, we need to do these three things. If we are trading a breakout, first of all, you identify a key support and resistance level. You have to identify a key level of support and resistance. Then you wait for a breakout candle. Wait for a breakout candle, and after which you check for volume. Check for volume. If the volume is 2 times or more, enter. If not, stay away. It's probably a what? A fake breakout. It's probably a fake breakout. Now, the second one is trend continuation. During a pullback, wait for the trend candle to return, because that's what we call the trend candle. That is the candle that actually shows the volume in the market. It's called the trend candle. Now, enter only when the volume confirm momentum. Where it confirms momentum. Avoid weak candles with low participation, with low conviction. Avoid weak candle. And then the third one is the reversal confirmation. The reversal confirmation. Now, when market forms a double bottom, a double top, or strong rejection, confirm the reversal candle with our volume candlestick, which is going to be 2 times higher. 2 times higher. Put this at the back of your mind. 2 times higher. 2 times higher. It has to be 2 times higher. Now, you need to avoid entering too early so that you will not be caught by the market makers. Now, the best indicator to combine with this strategy that will help us is the first of all, we're having the 50 moving average, because we need to amplify our accuracy and combine with what? With volume. We need the 50 moving average, which show us the trend direction. It also give us strong continuation what? Confirmation. Then we also have our RSI, which is our relative strength index, which we use it only for confidence. It shows us area of oversold and overbought during this volume spike. Then lastly, we need to understand our market structure, which means we need to understand support and resistance, trend line zones. We need to understand volume plus trend structure, and all of this we need to understand it, because it is one of the things that actually gives us confidence. Remember, volume plus trend plus structure equals to high accuracy in the market. Now, if you can be able to combine volume indicator, combine trend indicator, and also structure, you are going to be confident in the market. Now, that is one of the things that boosts my trading career, because I combine the three of them in my trading. Now, common mistakes that traders make with volume. Now, the first one is trading breakout without checking volume. You need to check volume because before you trade a breakout. Entering just because the candle is big. No, no, just because the candle is big does not mean you should just enter. Misreading low volume pullback. You need to understand this. I have done video on this. You can actually watch and learn. And then thinking volume works alone. Volume does not work alone. You must understand structure. You must understand trend direction. You must understand structure. It does not work alone. Volume is not the strategy. It is only the confirmation. The 2 times volume combination will help us in confirming the trick, and it will save you from countless loss in the trade. Now, when the market moves, check volume. If it does not support the move, don't touch it. From today, stop guessing. Stop guessing. Start confirming before you trade anything. Make sure you check if there is volume in the market before you trade. Confirm it with your market structure, and then use your volume indicator, the 50 moving average, the RSI, for you to understand what's happening before you jump into the market. Now, if this volume trick open your eyes, smash the like button and share it with another trader who need this. Comment volume if you want me to release a complete volume mastery series, and don't forget subscribe with the bell so that you won't miss any strategy and any video from me. Thank you. See you in the next video. I remain Mr. Joshua that make traders, that help traders trade the smart way.
Thank you for watching this video. Do like, share, comment and subscribe to this channel for more information.